Hey everyone, welcome to The Explainer. Look, if you're trying to cut through the noise and figure out what is actually happening in the Austin housing market right now, you are in the exact right place. Today, we're cracking open the ultimate year-over-year report card for May 2026. This entire breakdown was prepared by Joe's Real Estate People, and it's built on some incredibly fresh, highly detailed market data straight from Team Price. We're going to look at the hard numbers, summarize the crucial year-over-year changes, and figure out exactly where the real opportunities are hiding. Let's get into it. Okay, let's dive right into this. Here's our agenda for today. We'll start with the 2026 market shift, look at supply and demand, track the price tags, compare the high end to the low end, reveal winners and losers by city, and finally, break down what all of this actually means for you. Section 1. The 2026 market shift, setting the baseline. To genuinely understand what today's data is telling us, we kind of have to look in the rearview mirror for just a second to set our baseline. Back in 2022, the Austin market had an absolute peak. It was this wild, unsustainable frenzy of multiple offers and completely waived contingencies. But let's be real. As we look at May 2026, the landscape is totally different. We aren't in a free fall anymore. Instead, we're looking at a stabilizing, shifting environment. So by anchoring our focus strictly to the year-over-year changes since May 2025, we can see exactly what this new reality means for buyers and sellers out there right now. Moving on to Section 2. Supply and demand changes, the year-over-year reality. Supply and demand is literally the engine of real estate, right? It drives everything else. So how are buyers and sellers actually behaving right now compared to May 2025? Let's look at the supply side first. As of late May 2026, there are 16,991 active residential listings on the market. Interestingly enough, that's actually a 2.2% drop year over year compared to the exact same time in 2025. And this tells a really fascinating story. Sellers are holding steady. We aren't seeing some panic-induced flood of new inventory hitting the MLS. Sellers are definitely being cautious. And this brilliantly illustrates the other side of the coin, demand. While active listings took a slight dip, pending listings are sitting at 5,207. That is a 6% rise compared to last year. So think about it. While fewer sellers are throwing their hats in the ring, more buyers are actively putting homes under contract. Buyers are slowly but surely peeking their heads back into the market and taking action. This whole shift is captured perfectly in the activity index. Back in 2025, the index sat at 22%. Today, in 2026, it's bumped up to 23.5%. Now, that 1.5% year-over-year bump might sound small, but it's solid mathematical proof that the market is actually moving just a bit faster than it was a year ago. It's a subtle but very real warming trend. Now, to really gauge who has the upper hand in negotiations, we have to talk about months of inventory. If you aren't super familiar with the term, it simply means this. If absolutely no new homes were listed starting tomorrow, how many months would it take to completely sell out the current supply based on our current pace? Honestly, it's the most vital metric of overall market health. So let's see how this builds on our current data. In May 2025, Austin had 6.18 months of inventory. Today, that number has dropped 4.3%, down to 5.92 months. In the real estate world, a 6-month supply is basically the gold standard for a perfectly balanced market. So this year-over-year drop pushes us slightly closer to that neutral zone, though falling just under 6 months means buyers still hold a healthy amount of leverage and a lot of choices. All right, Section 3, tracking the price tags, price reductions, and peak drops. Let's get into the numbers everyone actually cares about most, the price tags. Now, what's really interesting about this next stat is just how drastically seller expectations have collided with market reality. 51.3%. Right now, over half of all active listings on the entire MLS have had at least one price drop. Just let that sink in for a second. Despite the slight uptick in pending sales, the current buyer pool is extremely price sensitive. If a home isn't priced perfectly right out of the gate, sellers are essentially being forced to slash their prices to get any attention. It just proves sellers are having to actively adjust to the 2026 reality. So where are those prices actually landing after the dust settles? Well, the average sold price in Austin right now is $604,139. If we walk down the mountain from the absolute peak in May 2022, which was over $681,000, that represents an 11.41% drop. That's about a $78,000 discount. But it's vital to note that despite this huge historical drop from the frenzy, the year-over-year averages are finally starting to show clear signs of stabilizing. The median sold price, however, tells an even more dramatic story for the typical homebuyer. The median price is currently sitting at $459,990. That is down a massive 16.37% from the peak. Guys, we're talking about a literal $90,000 discount for the median home compared to 2022. For anyone who's been waiting on the sidelines, this paints a very clear picture of your newfound purchasing power. Section 4. High-end versus low-end, a tale of two markets. Real estate is never a one-size-fits-all equation, and these price shifts absolutely aren't hitting every house equally. When Team Price segmented the data, a totally fascinating anomaly emerged. Look at the bottom 25th percentile, your typical entry-level homes. The median price change year over year there was exactly 0.00%, perfectly flat. But if you look at the top 25th percentile, the luxury or high-end market, those homes actually saw year-over-year appreciation of 6.39%. So the premium market is actively gaining value while the entry-level market has hit a total plateau. Next up, Section 5, Winners and Losers by City, the micromarkets. When we say Austin real estate, we aren't just talking about one big city, right? We're talking about dozens of highly distinct micromarkets. So the crucial point is this: looking at the macro data can be incredibly dangerous if you don't zoom in. Out of the surrounding areas tracked, only 8 cities saw year-over-year appreciation, while 21 cities saw depreciation. Just look at the extremes here. Bastrop is a clear winner, actually up 5.2% compared to last year. Meanwhile, just down the road, Buda took a massive hit, dropping 24% year-over-year. You can really see here how the vast majority of local cities are still seeing year-over-year depreciations. Places like Cedar Creek, Dripping Springs, and Elgin, they're all down. And this brilliantly illustrates why you cannot rely on national or even statewide headlines. Your specific home's value is deeply, deeply dependent on the exact city and zip code it resides in.
Finally, Section 6, what this means for you, the takeaway.
Okay, we've thrown a lot of Team Price data at you today, but let's synthesize this whole report card into some actionable insights for the rest of 2026. First, let's look at the long game. 47. Based on Austin's historical 25-year compound growth rate, which is roughly 4.8%, projections indicate it will take 47 months, putting us right at March 2030, for the median market price to fully recover to its 2022 peak. We are absolutely not expecting an overnight snapback. This is going to be a slow, steady climb back up the mountain. So, here is your concise 3-step playbook to navigate this. Number 1, keep a really close eye on pending listings. That 6% bump we talked about shows demand is waking up. Number 2, ignore the macro noise and zoom into your specific zip code. Always remember the Bastrop versus Buda reality. And number 3, if you're a buyer, do not be afraid to negotiate. With over 51% of active listings slashing their prices, you have the leverage to go out and find a genuinely great deal. Which leaves us with one final thought. The frenzy is gone. The median price is sitting at a literal $90,000 discount from the peak, and we've got a projected 47-month runway before those peak prices return. The window of opportunity is wide open right now, but let's face it, it won't stay that way forever. So with the market exactly where it is now your time to buy? If you're ready to build a personal market strategy based on actual facts, reach out to Joe's Real Estate People today. Thanks so much for joining us on this explainer, and we will catch you on the next one.